Anybody that definitively says they know where cannabinoids are going to be in the next 2 to 3 years is wrong. It's too dynamic. It's too uncertain exactly what that looks like.
If you haven't noticed, cannabis has crept its way into the global dialogue, but it's still dependent on government regulation to go mainstream. Given that fact, how do you move forward and position your company strategically and financially as markets grow and mature?
What we do know is that there is a massive tailwind and massive upside for cannabinoids globally. So you want to have a diversified business that takes advantage of that.
Being a public company can be hard. Small missteps can have outsized consequences. I'm Tom Ryan, founder and CEO of ICR, and over the last 20 years, we've helped thousands of companies understand and navigate the stock market and the media. We'll demystify these and other increasingly complex stakeholder groups so you can focus on what you do best, building your company and unlocking your true potential. This is Welcome to the Arena. And hey, before we get started, Welcome to the Arena is definitely turning heads and getting a lot of attention, and we're very grateful for that. Lots of great guests in the queue, so please hit the subscribe button now and make sure you're part of the arena going forward. We appreciate it. With the use and demand for cannabis exploding around the globe, there's an incredible addressable market out there, but there's also risk. Cannabis is still a hot button issue for some regulators, and there's no timetable for broad legalization. Recreational versus medical, legalization versus decriminalization, taxation and legacy markets. The industry is as dynamic as it is confusing at times. It takes a smart, nimble company to navigate these issues, one like Aurora Cannabis. Based in Canada, Aurora produces cannabis products for medical and recreational use and has expanded their global footprint into 25 countries, in no small part due to the work of CEO Miguel Martin. Breaking into different international markets isn't easy, but Miguel understands the value of reputation, process, and being a first mover, and how that can prepare Aurora to pounce as new markets open up, both medically and recreationally. Today with Miguel, we'll be discussing all aspects of the cannabis industry, recreation to medical to science and innovation. Let's enter the arena with Miguel Martin. You know, this is a market that's so fascinating. Anything that's kind of new and volatile and dynamic gets the attention of investors. Maybe you could just talk about the opportunity that you saw and see around the world with cannabis and related products and you know, looking out 10 years, what does that market look like in your mind?
Well, I think that's a great way to phrase the question because it really is a global opportunity. And when you think about cannabinoids, there's all different parts of it. There's clearly a great interest in the rec business. If you look at where you can have recreational sales, obviously there's some states in the US, but there's not a federal construct. You have, our home country, which is Canada, where we're based, which allows rec sales, and only a couple other spots around the world. Medical cannabis really has had, some of the fastest growth and is clearly the space where you're seeing more and more companies adopt that regimen. And so the space is moving really quickly. And, a leader like Aurora tries to, have excellence in, what we call the sort of the 4 key areas. First is recreational sales. Second would be the domestic sales. Third is international sales. And then lastly is this really interesting space that you see in all other forms of agricultural products, but it's just coming to cannabis, which is genetics and biosynthetics, and Aurora is emerging as leader in that space.
It seems like while there'll be ebbs and flows of the market and the opportunity in legalized jurisdictions, you're positioned in a great sense. But before we get to those 4 segments, I wanted to just go back to the company for a minute. When you showed up at Aurora, after the acquisition, what was the state of the company? What did you see? And obviously, COVID was a part of that. So if you can kind of go back to that time, what did you see and what did you see as your priorities?
Aurora was a company in transition. Like many of the Canadian LPs, there were the heydays where, an amazing amount of money was being raised. And there was this thesis that the Canadian companies would leverage that federal regulatory status and be able to ship cannabis all around the world, including the US, that was going to open up very quickly. And unfortunately, what was learned is that regulatory environment was going to take a little bit longer, that many countries around the world would really want to have the economics stay within their country, and that the U.S. just wasn't quite ready yet. And so there was a right sizing that needed to happen of the company. So the company had already made some tough decisions about right sizing infrastructure and headcount, and we had to continue that. Secondly, we started to bring in, a different type of talent that potentially was at the company. These are folks with decades of experience, at pharmaceutical companies and large CPG companies, experiences that really helped us put the company on the right path and the path that we're on right now. And then lastly, we had to figure out exactly what we were going to be, as the company evolved. And when I came in, medical really wasn't, really first and foremost in the company's thoughts. And it was odd because the company was built upon medical, and really its strength was in its long history in serving patients, and particularly veteran patients in Canada, in a tremendous way. And so we repositioned that and really went around the world and decided which are the countries that were going to make sense for us long term.
Yeah, I agree. And I think, COVID whacked a lot of different businesses, yours included. And where you are right now with the SG&A reductions, the CapEx reductions, shoring up the balance sheet, you're doing all of this without having to sacrifice the bets that you have on the table in terms of revenue growth. Maybe you can just comment on kind of, you already commented on the balance sheet, but just kind of SG&A run rate, pathway to profitability. But you're not starving the company. You're not cutting to the bone. You're basically still providing investments for the future and be able to take advantage of that 10-year opportunity that we talked about.
Yeah, I think it's a great point. The company at one point was spending over $100 million a quarter on SG&A, and we have that down to the low 40s. At one point, we had over 9 manufacturing and processing facilities that, would have created a situation where we had the capacity to make 5 times the amount of product that we need today. I think if you look at the number of countries that we were in, at one point it was over, 14 or 15, and some of those countries we weren't making any money in. And so we're now operating in 12 countries. Our international business is profitable. Our domestic medical business is a really shining star. One of the interesting things about this business is you can make a lot of investments and really, not see the upside from them. But by the same token, as you look at genetics and biosynthetics, those are investments the company made previously that we can now monetize in a very thoughtful way. Another thing that's interesting about our business is having such strength in medical. We're the #1 Canadian LP in terms of medical. There are efficiencies between that and the rec business, selling similar products that benefit patients on the medical side, but also that consumers find interest in. So as we look at our investments going forward, we really focused on those areas that we know we can make money on. You've got discount flower, which is a big part of the business, where in many cases people are just breaking even or losing money. And then you've got margin accretive categories like premium flower and concentrates and edibles and vapor. And those are higher margin pieces of business. And so one of the things I learned in my past life is don't chase overall market share, chase, profitability, and look for that profit pool and what percentage of that you can have. And so that's what we've really focused on.
Yeah, if you're just pursuing market share that's not profitable. We've already covered a lot, but maybe we could just go back and slowly unpack each one of these segments, taking a deeper dive on that. What does it really take to succeed in medical that you guys do great, that your peers maybe don't do as well as you?
Well, medical is really challenging. First and foremost, you have to create products that really resonate with the patient. Patients go to great length with their clinician in order to, get that prescription and to find the right product. Once they find the right product, they typically stick with it. Secondly is navigating the variety of different patient mindsets and capabilities, because most of this is done online and through a conversation with one of our call centers. And so you have to make significant investments, much much more so than you ever would have to allow not only the patient to be able to navigate that experience and that redemption process, but also the clinicians and the physicians to make sure they're doing the right thing. And that's a constant support network. Once they've gotten into the query, is making sure that that product arrives exactly as intended in the way in which they want it to, on time and into their house. And so you have to bring up a lot of capabilities around DTC. Now, patients in their situations also are evolving. And so there has to be a constant connection and reinforcement that the products that you've offered them still meet their needs, and that potentially new products and new prescriptions for them might better serve them. And for Canada, many of our patients are veterans. And I think that brings on a completely separate forms of obligations. Obviously, the recognition of their service is first and foremost, but veterans have their own set of needs and expectations, and we have to do a lot of different things in order to service that group. Lastly, in some cases that you have union groups and you have these collaborations or collectives of patients that will have their own needs. And so once you really get an excellence at that, you can then really, port that to other countries. The other thing, beyond the actual interaction with the patient and the clinician is the regulatory authorities. You look at key markets like Germany and Israel right now, the incredibly strict provisions they have on product quality and labeling, registration and production, all are way different than anything you'd find in a traditional rec market or a CPG market. And we've invested significant resources in order to meet those requirements. Germany, is a great example on flower. Many companies were not able to even get their products qualified, and so therefore they're not even in the game. The hard work that we did in order to get our products to exceed the expectations of the German regulators is the same work that we've now had to do with Israel.
Yeah, so, big technology investment, there's barriers to entry around the medical business. Not just anybody can raise some money and get into it. And I think the evidence of that's not just talk, is you're rewarded with high margins. Like, this is not a commodity where anybody can kind of get in and do it. And maybe you can comment on those gross margins and how that provides a foundation for the business.
There is a massive amount of investment that the company has made. The company really, its roots are in the medical business. And so we're able to leverage those long-term investments and really see the benefit, of them today. The other thing is the margins in the medical business have been very steady. You don't see a degradation in the medical business like you see in the rec business. And also, as I mentioned earlier, when you meet the expectations and sometimes exceed the expectations of a patient or a clinician, they're not apt to leave. And so you don't see this dynamic nature of market share changes in it. The other point I'll make is that the regulators have a strong relationship with each other. So doing the right thing and having a responsible distribution network in France, in Germany, in Israel, in Poland, and Czech Republic, builds upon itself. And these regulators always want to do the right thing. And I think, Aurora has been recognized for that. We were really, pleased to be granted 3 of the 9 tenders, all of the flower tenders in France. That's a massive market, and it's going to be a significant contributor to our overall profits and revenue. But again, the reason we were able to do that is because of the strong reputation and the strong history that we built in neighboring markets like the UK and Germany.
I would imagine that the regulators seek you guys out. You have the ability to educate them, bring best practices in, so you're always going to be invited to, quote unquote, pitch for the business.
Yeah, I think, and also, as you mentioned in your opening remarks, we're just in the early days of cannabinoids. And so for these regulators, they're learning as well. And also, there's a lot of pressure on them for them to get this right. As you can imagine, there are some folks that are a little, questioning about the role that cannabinoids are going to have in the medical market. And so there's a really high bar for those regulators. So it's a great point that when they can find companies that are responsible and that understand the responsibilities around a product like this, they really gravitate towards them. And we take that very seriously. And, we do everything we can to have societal alignment around our products, which is something I've learned in my over 2 decades of working in regulated products.
Yeah. So medical on a global scale, when you look out over 10 years, it's a huge opportunity. The rec market may be even bigger than that. Like you mentioned in the beginning, slower to take off. And obviously, it's a very political decision for the regulators. But just a quick question on Canadian rec. Do you think there is a shakeout underway with, the fact that it is a fragmented market? There are several competitors. Do you think there's a shakeout where you can kind of step back, let them kill each other, invest in other areas, and then you'll ultimately have the wherewithal to be in premium product and be there at the end making money?
I mean, if you think about the thesis of the Canadian LPs is that they were going to be, world beaters and have all of these advantages. And that may still be the case. But if you look at the Canadian market today, it's clearly the shakeout has already started. You're seeing discount flower, which is in many cases a product you can best break even on, and in some cases lose money, really growing. And so that's just not a long-term success. You're also seeing the top 7 companies only represent about 40% of the total business in a given category. That's not natural. We all look at California and Colorado because you're seeing, maturity there in a rec market, and you've seen an articulated category. Premium sales are growing, new products are doing well, there's strong economics, and Canada is going to get there. But to your point, there absolutely is going to be a shakeout. And with the capital markets now really seized up for those mid-sized and smaller companies, I think things are going to get a lot harder. Now, that doesn't mean that a small company can't be successful. We see some really talented craft growers and some that we're even partnering with that I think will have success. But long term, you're going to have some smaller, niche-y craft growers that will make some money, but you're going to have the bigger players that will have efficiencies and have advantages do better. And I think we're sort of in the midst of all that. The other thing to remember in Canada is it's early days. So I know it's easy for people to sort of question what's going on in Canada, this or that, but I give the regulators a lot of credit. You've got different provincial rules. You've got a federal construct that in all cases doesn't always match up with those provincial rules, and they're doing, a pretty good job. The other thing is half of the sales of cannabis in Canada still go through what we call the legacy market, which is the, non-legal market. And that's starting to change through enforcement. I think you're going to see a stronger, more articulated, more premium rec market going forward. And at that point, the companies that have made investments there will do well. And also we'll be able to take those learnings into the U.S. at a time in which the U.S. goes federally legal.
As an industry, cannabis is at a huge inflection point. But what's next isn't clear. I wanted to know where Miguel thinks the industry is headed and how Aurora is positioned to capitalize.
Anybody that definitively says they know where cannabinoids are going to be in the next 2 to 3 years is wrong. No, it's too dynamic. It's too uncertain exactly what that looks like. What we do know, and history has proven, is that there is a massive tailwind and massive upside for cannabinoids globally. So you want to have a diversified business that takes advantage of that. So what can we see from what's been happening? Medical cannabis is the fastest growing segment by far globally. Germany, Israel, UK, Poland, Czech Republic, France that we're now seeing, all of those are medical markets first. So that is without question. And you're going to continue to see a movement. It's the same thing in the US with the States. Secondly, you definitely see advantages for those companies that have excellence in medical when those geographies turn into rec. What do I mean by that? You can sell the same products. You can use the same production facilities. You have the same regulators. All of those things add up to being, successful. Third is, what we do know is that there are other forms of economics beyond just rec and medical. This is not going to be the one agricultural category where biosynthetics and genetics and science around the plant, its health, its yield aren't going to be significant. And so Aurora is a strongly diversified company, and I'm awful proud of where we are right now. If we were rec only right now in Canada, it would be a disaster. And having the strength of the medical business with mid-60s margin, with global portability, has really benefited us in a really strong way. I am amazed there isn't more conversation about medical cannabis as being the foundation of all things cannabinoids. And I understand the economics of the rec business in the US, but it's a big world out there, as we've all learned in this global economy. Now, in terms of the US, I would say, having spent a lot of my career interacting with the FDA, this will not be the one regulated item and particularly with cannabis and cannabinoids, that the federal government is not going to have a piece of. There's no possible way that there's not going to be a role for the federal government. There's no possible way that the FDA is not going to play a role in the regulation of these products. It's like saying the feds aren't going to have a piece of alcohol or the feds aren't going to have a piece of tobacco. It's not realistic. And so that doesn't, and people will say to me, well, Miguel, what about states' rights? This doesn't preclude states' rights. And so I think, President Biden has been quite consistent that cannabis has not been, front of mind for him. And when pressed on the issue, he has said consistently, medical first and decriminalization. And so, when people say, what are you doing to get ready for the U.S. or what are you going to buy in the U.S., my answer is every dollar that we put into Israel or France or Poland or Germany or UK where I can make money is a dollar well spent for the US, because all of the same standards and all the same production metrics and all that stuff is going to apply when the US opens up. And I think it's going to be a little bit longer. And I know people don't want to hear that, but no one's going to wake up one day with President Biden signing comprehensive cannabis legislation. Congress will be involved, the Senate will be involved, and we'll see this thing coming. The other thing about cannabis is there's no evidence that first mover status has made a difference. Look at how dynamic the market shares are, Canada, Colorado, California. And so you don't have to be first to win. And so we're very confident that with a company like Aurora that's got excellence in biosynthetics, science, genetics, medical, and a relevant rec business, that there are going to be plenty of partners that will want to come in. The other thing that I don't know that everyone wants to hear is at a time in which that happens, you're going to have a whole different category of competitors. Big Pharma is going to come in. You've seen investments from the tobacco companies. Obviously, some of the alcohol companies have made big investments. And that's just a different animal that I think, we've had to deal with in Canada and some other markets that we'll have to deal with in the US. And so, listen, I wish it would happen tomorrow, but we're definitely going to be ready when it does.
I'm confident and totally agree with what you're saying, how it is going to pan out over a long period of time. It's a secular, massive tailwind. And with the medical and rec stuff you're doing, you obviously have the foundation to capitalize on it as it's expanding. I did want to cover the science and innovation unit because I think that's fascinating, Miguel. Maybe just tell us what you're doing there and the business model of it, which is so cool. And obviously you've got the wherewithal to invest in something like that when others might not. Maybe talk about that unit and what you're doing.
Aurora, as many people know, and some might criticize it, has spent billions of dollars acquiring companies with a lot of different capabilities. One of those acquisitions put Aurora in the position to have what potentially is the largest genetics lab in the world on cannabinoids and cannabis products. We screen over 7,000 cultivars. What's not known about cannabis today is that there is a lack of diverse genetics because of the inability, unlike with other categories, to cross-border a lot of these genetics. And we have continued to develop really some significant genetics. Now, on flower products particularly, you're seeing this evolution and this search for higher potency, higher terpene, and really more articulated products. We've been able, most recently, to launch 3 new products, all high, 26 plus potency, high terp levels, and already seen $1 million in sales. What's also interesting as a secondary line of business is we're now selling those genetics to other companies. And we had a tremendous craft grower named North 40, who's very well known in Canada as one of the preeminent craft growers, take one of our genetics and get almost 30 potency with a product called Farm Gas. We're going to then bring that into our portfolio. So this ability to screen, develop, and then grow in our world-class grow facilities is a significant advantage as we look at the value of genetics. The other thing in cannabinoids, which most people may not be thinking about, is there a strong IP around those, and you can have genetic markers on that. So as we develop these, not only can we get economics from them, but we can also protect that IP around the world, which creates significant profits. So that's one key piece. The other piece would be around biosynthetics. One of our acquisitions had a significant pathway that we think will be one of the most efficient pathways to create minor cannabinoids and other cannabinoids. If you look at the cost of certain minor cannabinoids, the ability to use biosynthetics like are used in many other areas is a significant profit generator, and we're in the midst of developing that right now. as well as defending those IP rights. And then lastly, there is incredible amount of science and experiential history and value to being able to grow cannabis products and develop cannabis products at large scale. So in many places around the world, you see very small operations that are either servicing a state or servicing a small country or a small geography. Aurora's got a long history of developing massive outputs from these large-scale facilities. And as we get into this global cannabis economy, those three aspects of our science and innovation will really allow us. The good news is, in almost every case, the CapEx has already been spent. And so there's not a huge amount of capital needed to drive economics around those.
Yeah, and innovation is the lifeblood of any company. It sounds like you guys are all over it, and the IP angle is so interesting. I think when you're on that cadence of reporting earnings every 90 days and everybody's looking for an exact number, what sometimes doesn't get appreciated is the strategic progress on innovation and IP and all of that stuff, which is going to set the company up for multiple levers to create value over time down the road. So when you step back here, right, we talked about medical, we talked about rec, the opportunities, the science and innovation unit. You combine that with the SG&A moderation, rationalizing the cost structure of the business to the current market. Maybe talk about the pathway to EBITDA profitability. And look, the reason that you're not there yet is the company built a big global infrastructure in anticipation of, kind of a slow and steady march on legalization or medical. Maybe talk about the path to EBITDA profitability, how you create value, your view on acquisitions, that sort of stuff.
So, I would say what's interesting about the cannabis companies that, makes investing in them a bit different than in other ones is if you look at the largest Canadian LPs, we're all different. So we're structured different. Our businesses are wired differently. What we're trying to do is a little bit different. And so it's not like comparing Coke to Pepsi or comparing Ford to GM. They're different companies. So what is Aurora? What's unique about Aurora? And you've touched on a lot of it. It is our intent to be profitable, to be responsible, to be global, and to be portable, that we can take those businesses in different ways. And the profitable one is a really important one. And I know there's been frustration from investors about when is the company going to be profitable. In the past, as the company has talked about that path to profitability, they've always talked about growth. Well, we're going to see revenue growth here, or we're going to see revenue growth there. We're going to see margin accretion, and that's how we're going to get there. The company, had already announced $300 million in efficiencies, which was a massive piece, and it delivered on those. We most recently announced another 60 to 80 million a year in annualized efficiencies, or over 15 million a quarter. And so if you look at our last earnings, which we were pleased to report last couple of days, we were minus 13.9 on an adjusted EBITDA basis. So if you take the Q4 of our last fiscal, which we just finished on, and you take that revenue, and then you take those efficiencies, which are within our control, we will be break even on an adjusted EBITDA basis. So said differently, we do not have to grow any revenue. Now, that's not our plan, and we've demonstrated, particularly in the medical business, we can grow revenue, but we don't have to grow any revenue, and we can be EBITDA positive. And so at that point, you would have a company with a significant amount of cash on its balance sheet. You'd have a company that'd be making money. You'd have a company that'd be number one Canadian LP in terms of medical. You'd have innovation, science, and rec. And I think that's a really unique positioning for anybody that is long on the cannabis thesis. We want to make, money from a free cash flow standpoint. We want to continue to grow our market share, in the medical business and the rec business. We want to demonstrate our excellence in innovation and science. But in terms of that, I think at that point, we would be one of only a few, and probably one of the only that are our size, that could say that. Now, if someone wants to bet on a more speculative company that's not making money and it's more like sort of a Silicon Valley type of model, that's fine. I've just always worked in companies that make money, and I think that's what shareholders want to see. And with medical margins in the mid 60s, albeit the challenges you may see in the rec business, I think we can get there.
In a dynamic, changing, and growing industry, you can lose focus due to the sheer amount of opportunity, and in turn, this can adversely affect cash flows and capital levels. That's why Miguel has focused in large part on medical, which provides great margins and a solid foundation from which to grow. It's driving international expansion and the ability to reinvest in bioengineering and IP, which could create significant barriers to entry down the road and high-margin revenue streams as the industry unfolds. I'd like to thank Miguel Martin of Aurora for joining us today. He's clearly very experienced and a hands-on expert when it comes to regulated CPG businesses and what needs to happen to succeed. Once again, if you enjoyed this episode, please rate and review the show wherever you get your podcasts. It really helps. We'll see you next time, back in the arena.
References to specific stocks are not intended to be recommendations for specific trading behaviors. Comments presented on this podcast are intended for informational and educational purposes only, and do not represent opinions or recommendations on whether to buy, sell, or hold shares of a particular stock. All investors are advised to conduct their own independent research into individual stocks before making a trading decision. In addition, investors are advised that past stock performance is no guarantee of future price performance.